Good morning, everyone. Welcome to Live Trading Action by InTheMoneyStocks. Today is April 13th, 2016. A stock I'm going to show you today is highly affected by the oil industry. Now, you wouldn't know it today because oil is a lot higher. Crude oil is yesterday broke out on the charts and is now trading above $42 a barrel. But you see, the stock I'm going to show you now is Delta Airlines, and you would think that the airline industry would be affected by the higher move in oil. But today, Delta is trading up about $1. But a level I'm going to show you now where I would get interested in the stock, because I think oil could trade higher with the recent breakout, would be around 43.50. So if oil trades up, Delta should pull back. Right now it's trading at 47.68, but this is a level where I would get interested. Anywhere from 43.50 to $44. This is where I think the stock is poised for another move higher. So again, you've had a move right here from March 21st where the stock traded as high as $50.50. It pulled all the way back down into the $46 range by April 7th, and now here we are April 13th, and what you're seeing is it's putting in a little bit of a bearish wedge. So ultimately, I would think that Delta would roll back over and test this level down here, but this is where you want to be a buyer of Delta Airlines. Stock has been very, very strong. It's held up very, very well. It's probably the leading airline stock out there if you look at the industry group. So again, I would look for that level, especially if oil does surge higher, maybe by another $4 or $5 on the oil front. We should see Delta pull back into this range. And for that matter, all the airlines will pull back. But whenever you're trading stocks and you're trying to pick a level to get into them, you want to pick the best in the group, and I think Delta Airlines right now is probably the best airline in the industry. So again, that would be a level that I would look for. And let me show you one of the reasons why I'm picking this spot. If you go back and you look at where the stock had the last wide range breakdown bar, that was right around $44. And you can see it broke down and went a little bit lower, went almost down to 40 here. This was in February. And then look what it did. It went right up here, tried to test that red bar high, failed, and then it broke out there. And you could see that this is where the institutions really piled on, and that brings you right to $43.50. So that's my reasoning behind it, and it's a pretty easy trade. You just put your stop below 40 on a weekly chart close, and it's a pretty easy trade. So again, if you want to trade this alongside of us, come on over, take that 7-day free trial to the Research Center to get all of our nightly chart setups, get our No Hype Live broadcasts, which allow you to come in and ask us questions about any individual equity you may be looking at, or stocks that we're involved in, or sectors or commodities. It really doesn't matter. It's an open forum to all the members to ask us questions. And then you could come over and get all of our cycle work each and every night. So it's really a fantastic program. A lot of people are involved in it. And again, if you want to trade this alongside of us, come take that 7-day free trial to the Research Center. All right, with that being said, everyone, I'm going to leave it here short and sweet. I want to wish you all a great trading session, and we will see you on the charts.